does it really make sense to tokenize the Eiffel Tower? And what's the underlying business model for the investors? So do they get any revenues, or is it just a status symbol that I own it? Is it a collectible? So we need to find out the first step. We call that business alignment. So we don't want to tokenize anything just for the sake of tokenizing it. So what I would like to find out is why you want to do it, and how we could make that business better for you if we tokenize it.
Welcome to Inside Digital Assets, the podcast about the future of capital markets, tokenization, digital assets, and the technologies that power them.
Tom, welcome to our podcast. A pleasure having you.
Pleasure to be here, Claudio. Thank you for the invitation.
Tom Rieder is the head of digital assets at ISP. That's a securities firm in Switzerland and also internationally. And you focus on securitization, trading, digital assets. And Tom personally is one of the original gangsters here in Switzerland. So super pleased to have you in Tokenization. You built up one of the first tokenization platforms.
Exactly.
And now you and the tokenization platform is with ISP Group. And as a company, you are also one of the first trading participants on BX Digital Exchange. So you're a pioneer in many ways.
If you say so, then it is.
And so this is kind of the general intro, but now let's maybe talk day-to-day business. What are you coming from? What keeps you busy at the moment? Hopefully not at night, but during the day.
So I have been in the tokenization space for the last 8 years already, and what they see today is really the use cases that work. So it's not just we do a showcase, we try to see how tokenization works. So we see really demand coming. So there's a lot more of issuers that want to go into tokenization, and big projects, funds, big real estate projects. And one of the missing puzzle pieces was always this working secondary markets, and there you will come into the game with Seturion and BX Digital. So very glad and optimistic that it finally takes off.
Wonderful. So we're going into the next stage of adoption, you would say, from kind of more innovation into early adoption, or maybe even mass proliferation.
Definitely. I mean, what we saw in the early days was a lot of self-issuance, token hold in self-hosted wallets, self-custody, whether it was cold wallets or hot wallets. But now we see, especially in Switzerland, more and more financial service providers that are offering custody services for their clients, which really is, for me, the big sign that the market will take off. So the wallet topic for me is like the core feature you need to have to access tokens and to get into crypto. And it's still a bit cumbersome if you're not so deep in technology. But if you have service providers, bank or other financial service providers that offer you that services, usability becomes more and more easy, just like a normal bank account, to hold tokenized securities or normal securities just in the same depot.
That's wonderful. And let's maybe take a step back. Maybe not all the listeners are super deep in the topic yet. And as we said initially, you're one of the OGs in tokenization. Let's maybe start from there. In your words, what is tokenization?
So actually, tokenization is digitization of rights. It can be value rights, it can be copyrights or usage rights. So you use blockchain technology, decentralized ledger technology, to wrap a right in a token that lives on the blockchain, that makes it very easily transferable, accessible. The rights are immutable, and transparency is given through the technology itself.
And how is that different from today's world?
I mean, one of the core concepts of tokenization is that you use decentralized ledger technology. So it's all about decentralization. So you don't have one central securities depository where one owns the database and everybody needs to interact with that. So through the blockchain technology, you don't have that central control instance anymore. So anybody can issue a smart contract, and through the smart contract can also generate tokens that then can be easily transferable in between two parties without having any intermediaries. It's just like you send a write from one wallet to another, but you don't need to have an intermediary. You just enter the wallet, the destination wallet address, and then the token transfer can happen.
And the benefit of that, does it make things faster, cheaper, more fun, etc.? What do you see there?
I mean, on the blueprint, everybody says it's faster, it's more efficient, it's democratization of assets. You take out the middlemans. So there are concepts which the technology allows, but in reality, we still see some gaps. I mean, yes, definitely there is some efficiency gains if you have automated settlements, DVP, when you really are in a fully tokenized world where you have stable coins for money transfer, where when you have tokens for the right transfers and everything can be automatized, then you definitely have efficiency gain. So that is one part where, I mean, technology has proven that it works, but still in the institutional setups, you have a lot of manual control instances and sign-off. So it's not yet fully automatized. So that is one part, but there's definitely some efficiency gains. The other thing is democratization of access or ease of cross-border transfers or payment without having the cut of all the middlemen. So that already works. You can now transfer if you want to. If your grandmother lives in Africa and you need to transfer money, when you use to have Western Union, they take up to 10% of a fee. If you send her stable coins, it comes at no cost. So there's definitely more access also to the financial system for non-banked people.
So how could somebody not just save costs, but or like an intermediary or somebody using the system, but also make more business? Could you give an example?
I mean, making more business, it's what a lot of people try. But at the moment, what I see, the technical infrastructure is not there yet for everybody. So one of the most important pieces, especially in Switzerland, is an institutional adopted stablecoin. I would say that would be one of the core base that you can transfer value and money from one person to another without having any middleman or credit card providers or stripes of this nation, which take up to 5% of the transfers. And I guess there we need to take a further step into stablecoin adoption in Switzerland. We see already quite a few stablecoins that are adopted by institution in other jurisdictions. And I guess that would be one of the paths where we can do a bigger move. And then it's all about the marketing. I mean, if you want to grow your business, you need to have access to clients. If it's international and you're in a global market, or even if you're regional and you can access a bigger market without hurdles, then I mean, it will impact your business in a positive way.
Very interesting. Now, assuming that this was now a bit, let's say, theoretical, can you give a few really concrete examples that you're maybe working on or that you have seen and are most excited about?
I mean, at the moment, what I'm very excited about is like tokenizing asset classes that usually are very difficult to access. And we work on several projects. It's mainly real estate project where we are looking to partner up with bigger communities of crypto communities which could have access to those investments. So it's having lower minimum investment amount. So you can invest in big real estate projects already with 1,000 Swiss francs, which makes that access class more accessible. Then it's private equity or pre-IPO stock, which are tokenized and usually just accessible for funds, which you might offer to other investors and also retail investors, where I see a big opportunity and also democratization of asset access.
And do you see concrete examples now going through your pipeline in these use cases?
Yeah, we work with one partner that offers tokenized pre-IPO stocks. That's a super interesting case. Then we work on 2 bigger real estate tokenization or even 3 real estate tokenization projects where you give access to those projects through tokenization. Yeah, I mean, that are the ones which I'm really excited about. And then it's also having more and more participating banks also in your ecosystem with BX Digital, where you see it's okay, it also comes with distribution power. So usually one of the big challenges was, yes, you can tokenize an asset, and does it get better? No. Do you have more liquidity in it just because if it's tokenized? No. Is it easier to reach more people? Theoretically, yes, but you need to have access to those people that own wallets, that want to invest. And I guess with more and more institutions that offer those products to their clients, and we go a step further down that route.
Wow, that opens up many follow-up questions. Let's maybe take that real estate example. Can you take us step by step through the process? So let's assume I have the Eiffel Tower and I want to make it accessible that everybody can have a piece of the Eiffel Tower. What's the process?
I mean, first we need to find out why you want to tokenize it. Does it really make sense to tokenize the Eiffel Tower? And what's the underlying business model for the investors? So do they get any revenues, or is it just a status symbol that I own it? Is it a collectible? So we need to find out the first step. We call that business alignment. So we don't want to tokenize anything just for the sake of tokenizing it. So what I would like to find out is why you want to do it, and how we could make that business better for you if we tokenize it. But sometimes people want to tokenize an asset, and then in this first discussion, we find out, hey, it might be easier to just securitize it, to make it bankable, to give it a Swiss ISIN, and then everybody can have it in their deposit. So we don't want to just tokenize it for doing it. So we need to find out how does it make the life of you as an issuer better, faster, cheaper? And then also for the investors, why should they buy a token? Could they also have easier access through a bankable asset? And that's the questions we try to find out in the first step, which we call business alignment. Once we have found out the business would be suited for tokenization, we need to discuss of what would be the best structure. And that heavily depends on the target investors you can reach. So if you have some investors that already have committed or that are interested in holding tokenized assets, and that's a plus. So usually, as with every asset, distribution is the key. So whether you securitize it or tokenize it, you need to find the investors that want to hold your asset, that want to invest in your asset, and having the opportunity to get a liquid secondary market is definitely one of the USPs. And with working secondary markets that you offer with BX Digital, that is one of the USPs that we say, hey, we tokenize it and you have easier access to secondary markets. You can list your asset there. You also need to provide liquidity. So it doesn't work without liquidity. You need to have a market maker, but there's a venue where you can offer secondary trading, and also the investors, if they want to get out early, and they have a liquid market.
So recap, so there's first kind of an analysis phase, like a business alignment phase from the issuer side. Then there's kind of a target profiling on the investor side. And then comes a technical piece.
Yes, correctly. Then
how does that work?
Yeah. Correct. So I left that one out. So actually, once we have defined what is this tokenization strategy, which investors we're going to target, how we're going to reach those investors, whether we go only the institutional way or whether you want to have a launch pad for self-issuance. Once that has been defined, we would start with the technical part that always involves the token design, what kind of token standard it is, what kind of blockchain we're going to work on. Also depending a bit on the secondary markets you want to be on. So if you want to trade in Switzerland, most usually it is we build on Ethereum blockchain with CMTAT smart contracts. If you want to be listed in other jurisdictions, maybe other token standards and other blockchain might be more suitable. So once you have done set up the smart contract, we could mint on behalf of the issuer as a securities firm, or if the issuer wants to have a self-issuance to retail investors and take care of all the KYC and AML steps, then we can set up those tools, the investor onboarding, and they can self-issue tokens and onboard their investors directly. Or we could do them if they want to trade in the institutional space with regulated banks and list it on a regulated exchange as PX Digital. Then we would provide those services. We would issue the tokens, then distribute those to the investors that subscribed in primary markets.
Let's double down on the investors. So how do I find those investors? So you mentioned before, maybe I already know some of them, but maybe I don't. In today's world, banks play a big role in running order books, etc. What do you see there?
I mean, that challenge hasn't been solved through tokenization. I would say you have more venues, especially in the primary market, to reach investors. You can partner with the big crypto communities or crypto exchanges that also want to offer more and more access to tokenized securities. So that definitely works, and you have more distribution channels. But at the end of the day, you want to have a liquid product and a liquid asset. And therefore, in the strategy, you need to have both. So the primary market is one thing. Success factors are you already have investors that want to subscribe bigger tickets.
Like an anchor investor. That has
investors,
visibility effect.
That definitely helps. Then find partners which want to distribute. And then third, really have a partner in the secondary market and also partner with the participating banks. I mean, it's a bit like in the traditional world. You still need to find or have that book where you have your investors.
So some things never change, but there might be new tools that can be added into the process and maybe facilitate some new channels.
Definitely, there are new channels or new opportunities, new applications, especially the neobanks that offer that, which have also distribution power now.
Yeah, that's an interesting point. I mean, do you see the banks kind of taking this up? Is there a digital investment bank on the line?
I see more when we look what's happening in the United States with the Robin Hoods and also with the big crypto exchanges such as Kraken. They don't care if it's a traditional security or tokenized securities. They want to offer access to investments to their clients. So at the end of the day, I guess the tech stack will not be important anymore, or the user, the investor, shouldn't care about whether it's tokenized or it's traditional. He just wants to have access to an investment opportunity. And I guess it's the part of the solution or financial service providers to make that access easy for his clients and the investors. So they don't need to care about wallets, about custody, about keys or whatever. It's just I invest in a security, and it can be tokenized or it can be a traditional security, and I just get access to it. and that's it.
So do you expect like the big investment banks like Goldman Sachs, etc., that they at some point would implement that tech stack and make it part of the investment banking activity?
They're already doing it, but they're doing it on purpose to have efficiency gain in administration and management and transfers. So that's all the big players are going into tokenization, either on public protocols or they're launching their own blockchains to profit from those efficiency gains.
Mm-hmm. So once you found the primary investors, comes the secondary market. You mentioned that before, and you talked about liquidity, etc. Let's go back to the real estate example. How do I create liquidity for a tokenized Eiffel Tower?
So usually we ask the issuers to provide that liquidity because it's, I mean, yes, there are market makers which you could also bring into the projects and say, hey, we use one of the allowed and regulated market makers on that venue to offer that service, which might trade on its own risk, its own book. That's one part. Or then if you don't find those, you need to provide the liquidity yourself. And then you have a service provider such as ISP, which would provide that liquidity management service for you.
Interesting that you now mentioned ISP. I mean, and I said before that ISP is one of the first trading members on BX Digital. What's your hope?
I mean, it's not a hope. I see it's like the way the capital markets of the future will evolve. So we're at the beginning, and what I see that in the next 10 years, the capital markets are shifting, or we'll see the technology shift, and it's just a natural thing to be part of that. I mean, we are doing paying agent for more than 90% of the ETPs listed on SIX, for example. So that business will shift in future. So we want to be the first that also are in the starting blocks to offer that service on the tokenized infrastructure.
So very much looking forward to these new investment opportunities. What's now that we're at the end of this podcast, your very next thing that you're running up to? How can people stay in touch with you as well on your outlook on things?
So you can always, if you are interested in tokenizing asset, you can reach out to me to LinkedIn, Tom Rieder, or through our website, ispgroup.com. So happy to connect with you. And I mean, one of the big things we're working now is really bringing the first tokenized assets on the secondary market together with BX Digital, and very happy that we can make that happen.
Wonderful. Very much looking forward to that. Many thanks, Tom, for having been here.
Hey, thank you for having me, Claudia.
This was Inside Digital Assets, a joint project by BX Digital and Seturion. If you enjoyed this episode, subscribe to our podcast and feel free to share with others.